All right, Liz, thanks very much. We'll be watching that as the end of the year draws near. We continue to see volatility in commodities and markets. Of course, oil prices bouncing a bit, but still near five-year lows. We've got a big sell-off today. The Dow Jones Industrial Average right now at the lows of the day, down 203 points. That's better than 1%. Technology and economically sensitive names really leading the decline. In fact, between Visa and Verizon and Merck, that's a big portion of this sell-off here. Athena Capital Advisors CEO, founder, and Chief Investment Officer Lizette Cooper is joining me right now. And Lizette, it's nice to have you on the program.
Thank you. Glad to be here.
To what do you attribute this big sell-off in stocks today?
Well, I think the big sell-off in stocks today is due primarily to the move overnight in China. Shanghai index was off over 5% because of tightening credit in China.
All right. The Chinese market, we know, has been rallying nonstop for the last 2 months or so, or certainly a month. In a month, it's down 25%. So one would expect some pullback, but you say the tightening of credit is really adding to the worries.
Absolutely. And we saw the index up 9.5% last week. So you'd think a little bit off now makes sense in profit taking, but I think there's really some more serious underlying jitters around the credit side of the Chinese economy. And then we transitioned into Europe after that. So European markets were down, and there's also some issues in Greece, and then to the United States. So we've kind of come all the way around the globe with a certain amount of jitters, and credit jitters can be contagious.
Meanwhile, we are looking at a stock market in the U.S. that is still right around record highs. We've been seeing a bull market very much in place for a long time. Is it fair to expect this selling to continue over the near term for that very reason, that we've just gone up for so long?
We have gone up for so long, and a lot of people think next year, it's nearing the end of the presidential cycle, the markets should be up next year. But right now, we have gone a long time without a correction. So I would be fairly cautious at this point.
Cautious at this point, meaning sell into the selling? What do you want to do? Should I be raising cash?
I think that most individual investors are going to have a really hard time timing this market. It's going to be pretty volatile. So you could raise a little cash by selling some of your winners, things that have gone up. Let's rebalance the portfolio kind of back to where you want to be in terms of risk, but don't get too far away from your targets. It doesn't mean that we're necessarily about to have, a big downdraft.
Sounds like you are a long-term bull, but over the near term, you are expecting this selling to continue for a little bit.
I think we could see it continue for a little bit.
All right. The commodities complex, another story we've got to talk about. Oil prices down about 30% in 2014. That has had wide ramifications throughout the markets. What's your take on the impact of these record low oil prices, or the record low drop?
Well, I actually think that now that we've had the record low drop, that we're near the bottom of the range.
You do.
So unlike for equities, I think that in the case of commodities, energy, that we seem to be settling into a range, according to the managers that we work with and some of the most sophisticated hedge fund and private equity managers, that they're looking at kind of a $60 to $80 range. We might dip into the high 50s. And so that's starting to make things like MLPs a little more attractive than they have been, especially if we stay range bound.
Those limited partnerships that you refer to have also lost value as the price of oil has come down. As we go into 2015 and we see this sell-off today, how significant might this become, do you think? It feels like every time we get close to like a 5% sell-off, the buyers come in, and it sounds like you would also be a buyer on the dip, but when?
I think that's a very tough question. We're going to have to see how it goes, play it by ear. But I do think around the world, the U.S. is the best place to be. And as I've said to you in the past, that quality stocks are a really good place to be.
Does the Fed raise rates in 2015?
At some point. Expectation would be, but there are forces balancing each other. Deflationary pressures from the drop in oil prices around the world, and we see really good jobs numbers. So the U.S. economy is doing pretty well, and so somewhere second quarter, third quarter, unless we have a really terrible credit crisis coming up, the Fed will raise rates in the middle of the year.
Are there any places to hide in this market? You said that the valuations look good for some of the limited partnerships in the oil space. You said you would look there for some values. Any other areas where you would be looking to hide as we have a 200-point sell-off in stocks?
Well, if you don't have any commodity exposure, this is a good time to pick some up, because I do think oil is towards the low end of the range. So things like the ETF, Natural Resources ETF, GUNR, that would be an example. Just something that's diversified, some cheap inflation surprise protection. Nobody's expecting it right now, so you can pick it up very cheaply.
That's a good point. All right, Lizette, great to have you on the show today.
Thank you.
Thank you so much for your insights. Lizette Cooper is CEO, President, and CIO of Athena Capital Advisors.